This LOS is compare the disclosures relating to finance and operating leases. Okay, we've seen this slide before, but before we jump into this LOS on leases, just wanted to point out again some IFRS references. Leases falls under IAS International Accounting Standard 17. So recall we've looked at plant, property, and equipment. That's IAS 16 is the relevant standard. IAS 28, investments in associates, we're not covering in this reading. IAS 38 is intangible assets, which we look at. And IAS 40 is investment property, which is LOS that we look at in this reading as well. So that was just another quick summary of the International Accounting Standards with regards to long-term assets. Now we're going to be looking at leases, which falls under IAS International Accounting Standard 17. Okay, this LOS is talking about disclosures with regards to leases. So when we're looking at disclosures, we're also looking at the financial statements. So we're looking at the balance sheet, the income statement, the statement of cash flow, and then don't forget the notes. And that's where we get information with regards to operating leases or finance leases from both the point of view of the lessee or the lessor. So let's look at the lessee first. And with regards to an operating lease, we know there's no effect to the balance sheet because an operating lease from the point of view of the lessee, they're just renting the piece of equipment. So they're going to report a net expense on the income statement. And the rent expense is an operating cash outflow. Now, if it's a finance lease under IFRS or a capital lease under US GAAP, they're going to recognize the leased asset and the lease liabilities. So assets equals liabilities plus equity. I'm a lessor, but it's a finance lease. I've taken the asset onto my balance sheet. I'm going to have the asset. I'm going to have the liability. So I'm going to look to any notes with regards to the balance sheet. On the income statement, we're going to have the depreciation expense on the leased asset, and we're going to have an interest expense on the lease liability. The reduction of the lease liability is a financing cash flow, and with regards to the interest portion of the lease payment, it's either an operating or financing cash flow under IFRS, but it's an operating cash outflow under US GAAP. So that's an important issue again between IFRS and US GAAP with regards to the cash outflows on the interest portion of a finance lease. So where would we look for information? We'd look on disclosures. We'd look at the balance sheet, the income statement, the cash flow, and the notes. Now looking from the point of view of the lessor, if it's an operating lease, they retain the asset on the balance sheet. So assets equals liabilities plus equity. So if a company is a lessor and they have an operating lease to another company, they have the asset. So it's increased to the asset, increased to the liability. And they're going on the income statement, they're going to have a rental income and they're going to have the depreciation expense on the leased asset. And on the statement of cash flow, the rent payments received are an operating cash flow. Okay. Now, if it's a finance lease, you're going to remove the asset from the balance sheet because the asset is going to move to the lessee's balance sheet. Okay. So on the income statement, they're going to report interest revenue on the lease receivable. And again, we saw this previously. The interest portion of the lease payment received is either an operating or investing cash flow because it's cash in. It's not financing, it's investing. It's cash in under IFRS, and it's an operating cash flow under US GAAP. And the receipt of the lease principal is an investing cash flow. Okay. So just also we have to look at when the present value of the lease payment exceeds the carrying amount of the lease asset. This is called a sales type lease under US GAAP. Again, going to remove the asset and recognize the lease receivable. But this is the issue here. You're going to report the profit on the sale at the time when the lease contract is done. And again, interest revenue on the lease receivable, and the interest portion is the same above. So again, with regards to looking for information with regards to a lease from the lessee or the lessor's point of view, we look to the financial statements, balance sheet, income statement, statement of cash flows, and the notes to the financial statements. So just one quick practice question with regards to this LOS. An analyst makes the appropriate adjustments to the financial statements of retail companies that are lessees using a substantial number of operating leases, compared to ratios computed from the unadjusted statements, the ones computed from the adjusted statements would most likely be higher for A, the debt to equity ratio, but not the interest coverage ratio, B, the interest coverage ratio, but not the debt to equity ratio, and C, both the debt to equity ratio and the interest coverage ratio.